Good morning. Here is today's Korean economic news briefing. The Korean economy is currently navigating a period of heightened uncertainty, largely driven by the ongoing Middle East conflict. President Lee Jae-myung has underscored the gravity of the situation, stating that the government might even utilize emergency fiscal orders to proactively address the instability in energy supply and demand stemming from the region. This strong language signals the administration's readiness to deploy extraordinary measures should the situation escalate further. The president also touched upon domestic issues, dismissing some reports of a shortage of waste disposal bags as exaggerated, urging a calm and measured response to such concerns. In a direct response to the global energy shock, the government has swiftly moved to approve a 26.2 trillion won supplementary budget, dubbed the Warchugeong or Wartime Supplementary Budget. This package is designed to mitigate the economic impact of the Middle East conflict on households and businesses. Key measures include providing up to 600,000 won in high oil price support for the lowest 70% income bracket, alongside an increase in public transport refund rates. Roughly 32.5 million individuals are set to benefit from a substantial 4.8 trillion won allocation, primarily distributed through regional currency vouchers. The budget also earmarks 5.1 trillion won for petroleum price stabilization and an additional 9.7 trillion won to reinforce local government finances. Crucially, this supplementary budget will be financed through expected excess tax revenue, avoiding the issuance of new national bonds, which is a positive note for fiscal soundness. This approach is projected to modestly improve the nation's fiscal deficit and national debt ratios relative to GDP, while potentially boosting economic growth by 0.2 percentage points. However, the decision to extend support to the lowest 70% of income earners has sparked debate, with some critics labeling it as quasi-universal support. Adding to the fiscal landscape, national tax exemptions are projected to surpass 80 trillion won for the first time this year. This significant increase, which is 4 trillion won higher than last year's forecast, is partly attributed to the need for expanded tax expenditures in light of the US-Iran conflict and resulting economic uncertainties, despite a robust tax base from the semiconductor industry. Concurrently, the government has signaled its intent to thoroughly review and eliminate ineffective tax exemptions and discontinue the habitual extension of sunset clauses for tax benefits. This move aims to streamline fiscal spending and ensure that tax incentives are productive and contribute to economic growth, with a focus on introducing productive financial ISA schemes. From a macroeconomic perspective, the Bank of Korea anticipates a healthy current account surplus this year, largely bolstered by strong semiconductor exports. However, the central bank cautioned that rising energy prices due to the Iran war present a significant variable that could constrain the extent of this surplus. The Bank of Korea's Monetary Policy Committee members foresee stable inflation and continued growth driven by consumption and exports, but remain vigilant on domestic and external uncertainties, particularly those emanating from the Middle East. They pledged to exercise prudence in monetary policy decisions, also noting the need for a more nuanced understanding of the labor market beyond public sector job growth. Neighboring China's central bank has echoed similar concerns, highlighting the inflationary pressure from surging oil prices and its potential impact on corporate profitability and the real economy. In response to the industrial shock, the Korean government is also implementing a 2.6 trillion won package, including doubling export vouchers and supporting naphtha imports, to shield industries from the direct consequences of the Middle East conflict. The financial markets have reacted sharply to the escalating geopolitical tensions. The Korean stock market experienced a significant downturn, with the Kospi plunging by 4% to the 5,050 level and the KOSDAQ seeing a 5% drop. Concerns are mounting about the KOSPI's ability to defend the critical 5,000-point threshold. This triple high crisis of high exchange rates, high oil prices, and high inflation is intensifying. West Texas Intermediate (WTI) crude futures rose by 3.25%. Pushing prices over $102 per barrel. The Korean won depreciated sharply against the US dollar, crossing 1,530 won during trading, a level not seen since the 2009 global financial crisis, with some analysts now even pondering the possibility of 1,600 won. Foreign investors have been net sellers for 9 consecutive days, contributing to the market's downward pressure. Even bellwether stocks like Samsung Electronics and SK Hynix, despite the generally positive outlook for semiconductors, have seen declines amidst the broader market uncertainty and inflation concerns. Amidst this challenging backdrop, some sectors are showing resilience. The K-battery industry, for example, is experiencing a reverse trend, attracting investor interest. This shift is partly due to concerns over fossil fuel supply disruptions from the Middle East conflict, which enhances the appeal of energy storage systems. Additionally, expanding global electric vehicle subsidies and a reallocation of liquidity from the semiconductor sector are bolstering investor sentiment. Innovations such as Pukeong National University's active separator technology, which enhances battery lifespan and safety, are also contributing to the sector's long-term prospects. Furthermore, marine batteries on the sea, is emerging as a significant new growth market for Korean battery makers, even as the electric vehicle market faces a temporary slowdown. Meanwhile, China's electric vehicle and battery industry is undergoing a significant restructuring, shifting its focus from quantitative growth to qualitative advancements, intensifying global competition for Korean companies as Chinese firms aggressively expand overseas. In the real estate sector, Korea is increasingly becoming a monthly rent nation. Monthly rent transactions now constitute a record 68.3% of the total housing lease market. This trend is driven by several factors, including the mandatory actual residency requirement for apartment owners, which reduces the availability of jaeons, lump sum deposit, units, stricter loan regulations, and lingering anxieties over jaeons fraud. The burden of increased property taxes being passed on to tenants and a persistent housing supply shortage further accelerate the shift from jaeons to monthly rent. In response, Seoul Mayor Oh Se-hoon has pledged to supply 130,000 public housing units and expand financial support, including up to 200 million won in loans at a 3.5% interest rate for middle-aged, first-time homebuyers, along with a matching savings account program. Despite the broader market shifts, new apartment offerings are continuing, with POSCO E&C launching Otir Banpo in Seoko GU and Colon Global introducing Travis Hanyulchai in Busan. Internationally, U.S. Federal Reserve Chair Jerome Powell stated that the current monetary policy stance is well-positioned to observe the impact of the Iran war, while downplaying concerns of stagflation. Powell's remarks come ahead of his final Federal Open Market Committee (FOMC) meeting next month, where market attention will also be on inflation-related comments from other Fed officials. The global trade environment, meanwhile, is facing significant disruptions from both U.S. tariff policies and the Middle East conflict. Experts are urging Korea to adopt an economic security-focused trade strategy, emphasizing supply chain diversification and enhanced cooperation in critical minerals to navigate these complex challenges. Finally, in the realm of technology, artificial intelligence continues to be a major economic driver and area of collaboration. A recent Korea-Canada Economic Cooperation Forum highlighted discussions on AI development. On the corporate front, Rayon Secure anticipates record performance this year, fueled by its agentic AI security automation platform. SK Ecoplan reported a robust 39.7% increase in operating profit, largely attributed to its strategic pivot towards AI infrastructure businesses. However, the rise of AI is also sparking concerns about job displacement, particularly for young professionals in IT and specialized fields, with some research projecting a significant rise in unemployment rates in the coming years due to AI's impact. Meanwhile, Amazon Web Services, AWS, announced plans for an additional 7 trillion won investment in Korea by 2031, projecting a 15 trillion won contribution to Korea's GDP between 2023 and 2027, with a focus on integrating generative AI into security operations. For investors, the immediate outlook suggests continued volatility, primarily driven by geopolitical risks and their impact on energy prices and inflation. While certain sectors like the K-battery industry and AI-related businesses show promising growth potential, a cautious approach and diversification are advisable. General viewers should closely monitor energy prices and exchange rate fluctuations, which will directly affect household budgets. Government support measures, such as the emergency supplementary budget, offer some relief, but long-term structural shifts in the real estate market and the evolving job landscape due to AI warrant close attention. That's all for today's Korean Economic News Briefing. Thank you for listening.